In this module, we are going to learn about the important journal entry when shares are forfeited and reissued. When shares are forfeited, the journal entry share capital account debtor to share allotment to call account to forfeited shares account. The amount transferred to share capital account equal to number of shares forfeited into called up value. The amount transferred to forfeited shares account equal to number of shares forfeited into actual amount paid by the shareholder. If there is any unpaid amount, they credit that account. The amount transferred to unpaid amount, it may be on at the time of allotment or at the time of first call or a second call. The amount transferred equal to number of shares forfeited into installment amount or call money amount or allotment money amount. Shares can be issued at par and issued at premium. Suppose the forfeiture of shares issued originally at premium. In that case, the entry will be share capital account debtor, securities premium account debtor to forfeited shares account to allotment account to first call to second call. The amount transferred to share capital account equal to number of shares forfeited into called up value. Shares can be issued at par or issued at premium. The forfeiture of shares originally issued at par, the entry share capital account debtor to forfeited shares account to unpaid amounts or unpaid installments. In the case of forfeiture of shares originally issued at premium, the entry share capital account debtor with the called up value, securities premium account debtor with the securities premium amount to forfeited shares account, actual amount received from the shareholder or actual amount paid by the shareholder to allotment money, then to first call and to second call. This is the entry for shares issued at premium. When forfeited shares are reissued, we have to pass two entries. First entry for reissue entry and second entry for transfer of profit element in the share forfeiture account to capital reserve. In the case of forfeiture and reissue shares, we want to pass three entries. First entry for forfeiture entry, that is share capital account debtor to forfeited shares account to unpaid amounts or unpaid installments. Second entry for reissue entry, that entry is bank account debtor, forfeited shares account debtor to share capital. And third entry, forfeited shares account debtor to capital reserve. When shares are reissued, the entry bank account debtor, forfeited shares account debtor to share capital. The rule for transferring profit element in forfeited shares account to capital reserve equal to number of shares reissued into per value of share at the time of forfeiture minus per value of share at the time of reissue. This is the equation for calculating the profit element or balance amount in the forfeited shares account. Then entry forfeited shares account debtor to capital reserve account. For example, a company decided to issue 10,000 shares. Then one shareholder who holds 200 shares failed to pay final call of rupees 2 rupees. Then these shares were reissued. The reissue price of the share equal to 9 rupees. The face value 10 rupee, reissue price equal to 9 rupees. There is a loss of 1 rupee. Clear? Then first pass the journal entry. Share capital account at 10 rupees to forfeited shares account 8 rupees to unpaid amount of second call 2 rupees being 300 shares forfeited. In this entry, the amount transferred to forfeiture account equal to how much? 8 rupees. Total face value 10 rupee, non-payment of second call 2 rupees. So actual amount received from the defaulting shareholder equal to 8 rupees. Then second entry, bank account debtor 8 rupees, forfeited shares account loss of 1 rupee. 1 rupee to share capital 9 rupees. Then last entry for transfer of forfeited shares balance to capital reserve. Entry forfeited shares account added to capital reserve. In the first entry, the amount transferred to per share in the forfeited shares account equal to 8 rupees. In the second entry, the amount transferred to forfeited shares account equal to only 1 rupees. So the equation for calculating the amount transferred to capital reserve equal to number of shares reissued into per share value at the time of forfeiture minus per value share at the time of reissue in forfeited shares account. In this problem, at the time of forfeiture, the amount transferred to forfeited shares account equal to only 8 rupees. At the time of reissue, 1 rupee. So the amount transferred to capital reserve equal to the number of shares forfeited, that is 300. 300 into per value share at the time of forfeiture, that is 8 rupees, minus per value of share in forfeiture account at the time of reissue, that is 1 rupee. Therefore, the amount transferred to capital reserve equal to 300 into 8 minus 1. So 300 into 7, 2100 is the profit element transferred to capital reserve. Entry forfeited shares account debtor to capital reserve 2100 being profit or balance transferred to capital reserve account.